Okay, I'd like now to kick off our first session, and I'm going to hand you over to Lisa. She'll give a high-level overview of some of the changes that have occurred and are coming down the track in respect of the Irish auditing and accounting regulatory landscape, with a particular focus on corporate sustainability reporting. So, Lisa, over to you.
Thanks, Kevin. Good morning, everyone. So we're going to kick off with a couple of Slido questions. So you'll note a theme for the day of sustainability. So this is an area, as you're probably aware, that has a raft of acronyms, and we will do our very best to remember to explain them all as we're going through. But when we say sustainability, it's really an all-encompassing term. We're trying to capture everything that you might know as ESG, which is environmental, social and governance, or CSR, which is corporate social responsibility. And CSRD then, not to be confused with CSR, is a new directive that's coming down the track. It's a major piece of legislation coming from the European Commission, and it's expected to impact 50,000 companies in Europe. So we will talk about it in a little while, but before we talk about it, I suppose we wanted to assess what people's existing levels of knowledge are of it. So the first question we have there is, how familiar are you with CSRD? Then the second question is, how familiar are you with ESRS, which stands for the European Sustainability Reporting Standards? And then finally, what impact do you think CSRD is going to have on your company? So we'll give you a minute to answer those, and I'll just go through the overview of the session that I'm going to give this morning. So I'm going to talk to you about the European Commission's consultation on corporate reporting and its enforcement. I'm going to talk a little bit about IAASA publications. So I think lots of comments there about getting IAASA's perspective, and we published quite a bit, so just tell you where you can find those things. Then I'm going to mention ESEF briefly, but not to steal too much of Barry's thunder. I won't dwell on it too long. And then I will talk a bit about CSRD, so that Corporate Sustainability Reporting Directive, and what is coming with that. So we might click over to the Slido answers then, if that's okay. Okay, so we're seeing 79% is a basic knowledge of the CSRD requirements. So maybe you'll learn a bit more today, hopefully through my slides. Some 13% have no knowledge, and a small number then with detailed knowledge. So then on the ESRS's question, so the European Sustainability Reporting Standards, again, similar, fairly basic knowledge of those at the moment, a small number of detailed people. So let me know who you are, because we can definitely talk. And then the last question, what impact do you think CSRD will have on your company? So 50% of people think that there'll be some disclosure changes with a medium impact, 38% extensive changes, and then minimal impact. I think what I could say is that if you are in scope for this, it's probably going to be a fairly extensive impact on you. So hopefully you'll learn a bit more about that as we go through the session. So I'll start with talking about the European Commission survey, or consultation. So I mentioned at this event last year that the European Commission was carrying out a consultation on corporate reporting and its enforcement. And this arose from a combination of their response to Wirecard, and they were already planning a review of the implementation of the audit reform legislation that kicked in 2016. So there was 220 responses, probably some of which were in this room. And 57% of responses, the European Commission said, were from people who are actively working in audit or accounting. So the European Commission separated it into 3 separate pillars. So they talked about corporate governance, corporate reporting, and audit. So corporate governance, which is sort of around boards and audit committees. So looking at that one first, this was an area that respondents generally identified as an area of weakness. What the Commission said in their review is that auditors in particular were negative about the effectiveness, efficiency and coherence of boards' responsibilities, particularly in comparison to the liability that comes with being on a board. Conversely, preparers said that they felt the corporate governance framework was effective. But overall, there was support for increasing the responsibility of directors, ensuring that there's effective risk management and controls, and then also focus on increasing requirements for boards and audit committees to have particular expertise. Moving on then to the corporate reporting pillar. So lots of us have probably heard discussions about the ever increasing volume of corporate reporting information, and at what point is there so much information that it loses its usefulness. So it was good to note that 74% of people who responded to this consultation said that they do still find corporate reporting either highly or very highly useful. Overall, respondents said that they found the framework to be rather effective, which is one of the options in the consultation. But there was support for increased information sharing and cooperation between the competent authorities or the European regulators, as well as increased transparency and independence rules for those regulators. On the audit pillar then, there's slightly better news maybe for the auditors in the room, in that 82% of respondents said that they felt that audit contributes as much as it can. We all know about the audit expectation gap, but that audit does do as much as it can do. But there was some support in there for harmonising rules on rotation and for limiting the number of member state options available. So probably nothing overly surprising there. So in terms of what the European Commission is going to do next, this slide is wordy. It's a direct copy and paste from a closing section of the European Commission's summary of responses. So if you read it a few times, you might figure out what they're trying to say. But we could probably summarise the status as that the European Commission hasn't yet decided what action, if any, it's going to take in relation to this consultation or the issues that arose from it. So I think they are planning to thinking about it next year. So then we said we would highlight some of the ways that IAASA puts information out, as I mentioned. So we do use various channels to circulate our publications, so we just wanted to draw your attention to those. Our sort of main source really is our website, so we publish information there fairly regularly. And if you register on our website for updates, you'll get an email then every time we publish something, and it will have a summary and then a link to the document. We also try to publish summarised versions of all that content on LinkedIn. So if you don't already follow the IAASA account, please do, or you can follow any of our personal accounts as well, and we tend to share those. And we do put some video content on YouTube. Don't get too excited about our YouTube channel, but there is content there. And the last thing that we just want to say is we really do welcome feedback from all stakeholders. So, do let us know what you like, what you don't like, what you think is missing, if there's anything else that you'd want to hear from us. We really do welcome that. Then I just wanted to highlight a couple of the specific publications that we do regularly. So in Q1 each year, we publish our inspection results. So they're the results of our previous year's inspection findings in all of the PI firms. So they detail any firm-wide findings that we have, and we also list what grades we've given to the individual audit reviews. So we hope that those reports are a really useful tool for audit committees, that might prompt some questions for your auditors. We'd encourage you to have a look and see, are there particular themes that might be relevant for your entity, and just to have a think about those. So they're available in Q1 each year. Moving on then, our financial reporting team, they are probably our most prolific publishers. They publish lots of information, which again, we hope is useful for preparers. So one that I wanted to mention is our observations document, which again is an annual recurring document, where we set out what our priority areas are for the upcoming financial year end. What are we going to focus on when we're doing our reviews next year? So we develop these in conjunction with our European peers and the European Securities and Markets Authority, or ESMA, as you might know them. So it's probably no surprise, and it fits with our theme for the day, that climate disclosures is on that list. We've also included the war in Ukraine, and there are some specific accounting, matters that you'd want to consider in relation to that, so we list those. We also talk about the current economic uncertainty, impairment testing, and operating segments. So in each of those cases, there's detail in there about things that we think preparers should really think about when they're preparing their 2022 year-end accounts. So this is an annual document, and a recurring theme in this document is alternative performance measures. So this is something that comes up for us over and over again. So this is where in the front half of your annual return, it discusses performance measures which differ from the audited numbers. So there are requirements there. You're supposed to be clear about those. What is your definition? How do they reconcile back to your audited numbers? And we consistently see issues coming up in this area. It's something that we often have to ask issuers about. And increasingly, given the length of time that's occurring, we're increasingly considering referring those to the Corporate Enforcement Authority, because it is a breach of company law. In relation to the climate disclosures, we did do a separate publication a couple of weeks ago where we listed out all of the questions, not all, but most of the questions, recurring questions that we have already been asking issuers. Because some of the issuers have expressed maybe a bit of surprise about us asking about these climate-related disclosures. So we've listed what those questions are. So that should be helpful, to the issuers in preparing. So understanding, what do you need to disclose? How can you make sure things are accounted for properly? and hopefully minimise the risk of any greenwashing accusations. The last thing I wanted to mention here is that we do have an open consultation on our publication policy within financial reporting. So we are planning some changes, so particularly on the summary of our reviews. So we're proposing a publication in Q1, listing, I suppose, all the entities that we reviewed and maybe summarising what that engagement was. A couple of other small tweaks, but we'd encourage you to have a look at that consultation and use that as an opportunity to let us know, I suppose, what you like to see or hear from us and what format you like as well. So moving on then to ESEF, which is the European Single Electronic Format, as I'm sure those of you in scope will know. So 2021 financial year ends was the first year that needed to be electronically tagged. And definitely this was a challenging exercise for issuers and for the auditors. So that observations document that I mentioned includes a section on ESEF, which highlights some areas where we noted deficiencies in our reviews this year. They are kind of consistency of tagging. So if your profit is noted 3 times, is it tagged the same way each time? Making sure all your zeros, particularly if they're dashes, making sure they're tagged. Sometimes the dashes get missed. And footnotes where they have monetary amounts, they need to be tagged as well. So we issued, actually yesterday, we pulled those into a separate document. And we also noted that the requirements are increasing for 2022. So the notes to the accounts are going to have to be block tagged for the first time. So we've been talking to a couple of issuers and to the auditors about this, and it's definitely presenting new challenges. So if you need to do this and you haven't started, definitely engage early, we would say, with your software providers and the auditors to identify those issues as early as possible. So moving on to the Corporate Sustainability Reporting Directive, so the very interesting topic. So I'm going to run through, I suppose, who, what, where and when that you have to do this. So starting with the who. So large PIs. So PIs are listed entities, insurance undertakings or banks largely. So any large PI, so that's more than 250 employees, is going to be in scope for this. A large private company, again, over 250 employees. All listed companies unless you're a micro. And then I won't dwell on the last one because you'll have to read that a few times. So basically it's non-EU legal entities, but it's a subsidiary or a branch of a non-EU company that has a lot of turnover in the European Union. So the European Commission has decided to bring those into scope, which is a very interesting development. So what do you have to do? So the law lists out these headings that must be addressed in the reporting. And it's really important to note that it's not just your own company, your own group that you have to report on. You have to report on the entire value chain. And that definitely really increases the complexity of this. So you can see from this list, I won't read it, but there's a really wide range of topics that have to be addressed. So you can imagine that for your own company, it's going to be really difficult to identify one or even a small group of people who can actually cover all these areas. You know, climate probably is the one people are maybe most comfortable with, but you have to talk about human rights and employees, there's water use, circular economy. It's a really wide range of topics. So it's going to be a challenge, most definitely. So where do you have to do this? It has to be in a clearly identifiable, dedicated section of your management report. So it is within your annual financial statements. And the report will have to contain a description of your processes, impacts, risks, and indicators. And then you have to consider short, medium, and long-term horizons. And just to top it all off, it has to be electronically tagged. So there is an awful lot to do here. So when are you going to have to do all this work? Well, if you have more than 500 employees, you have to do it from the 1st of January 2024, which is really not that far away at all. If you have between 250 and 500 employees, you are in scope from the 1st of January 2025. For listed SMEs, the law says 2026, but also there's a completely open opt-out until 2028. So the SME can decide to opt out until 2028. So I suppose you might be wondering, how exactly are you going to do this? How are you going to know what to report? Is there any guidance? So the European Financial Reporting Advisory Group, or EFRAG, has been asked by the European Commission to draft ESRSs, or the European Sustainability Reporting Standards. So lots of new acronyms there. But basically, these are the IFRS of sustainability reporting. So they are open at the moment. There's work ongoing. I think the consultation is closed and they're working on the next stage of the documents. The first drafts were extremely detailed and prescriptive. And we've heard people say around Europe that actually they think their annual reports could more than double in size. So, they're expecting this to have a really massive impact. There's an added complication that in parallel with this European development, the International Sustainability Standards Board and the Global Reporting Initiative are both developing their own sets of standards. So there's a lot of concern in the market about how will they all interact with each other. And based on current drafts, basically they won't. They're very, very different. So and we all understand that in global companies, how difficult that is to deal with several different requirements in the same company or the same group. So yeah, as I mentioned, we're going to need, lots of specialists on board to gather this information, to prepare it. And the sustainability reporting also introduces a new concept of double materiality. So most of us here are probably familiar with the concept of materiality. It's, how financially material is something to an entity. We can all kind of figure out how to work that out. However, double materiality requires companies to consider not only what's material to them, but also whether they have a material impact on the climate or other dimension of sustainability. So one of the examples we often throw out is if you have a group that has a mine in, Uganda, you have to consider the impact on that local community in Uganda, what's material to them, which is going to be a wildly different, I suppose, consideration to what's material to the group overall. So it's going to be very difficult to determine this and to assess it. So it's definitely a focus on lots of the feedback or consultation responses that I'm aware of, lots of calls for guidance on that area in particular. Then considering the audit or assurance of all of this, so companies are going to be, this is what the law says, companies will be required to seek an assurance opinion. So that can be your statutory auditor, but doesn't have to be. There was, as this was developing, there was talk of actually banning statutory auditors, but they moved away from that. So they are opening it up, I suppose. It can be your statutory auditor, but doesn't need to be. So initially, it'll be limited assurance. So that's probably what you're familiar with now on the front half of the report. The auditors will read it and they will, highlight anything that looks inconsistent, is the phrase. And the Commission will have to adopt a standard on that by the 1st of October 2026. Now, if you look back at the dates, so what that means is that auditors will have to do this for a couple of years with no standard being issued by the Commission, so that'll be difficult. And then the European Commission has to consider if it's feasible to move to reasonable assurance, which is a much higher bar, much higher. So that's where the auditors will actually have to test what's there. You'll have to give your auditors evidence to support it, and they'll be making sure that that's all reasonable. So very similar to your statutory audit, except on wildly different information. So there'll be a challenge for auditors and for the issuers, of course. And if the Commission does decide it's feasible to move to reasonable assurance, they will need to adopt a standard in 2028. So Kevin mentioned the slides will be circulated. So I have put in some links there to some of the documents that I've mentioned. So you can go and have a look at those further if you want. And that is it from me. So I will maybe have a look in Slido and see if there's any questions in there. And as I say, if anyone in the room wants to ask a question, if you stick the hand up, Barry will come down to you with a mic. So question there, if a company is already publishing reports based on GRI or international standards, can they cross-reference to the CSRD requirements? That is something, it's an area that is being discussed, as far as I'm aware, by EFRAG in developing the standards. So there is questions about whether it's okay to cross-reference to other documents or other areas. So there is no clear answer to that, I think, at the moment. I think probably the indications are no, because the law requires it to be in this management report, but it is something that is being looked at. Another question then, local legislation will be required to implement CSRD, any information on timeline. So we are expecting that the directive will be published in the official journal, which makes it officially EU law. That is expected to happen by the end of the year, so by the end of December. And from that date, then member states have 18 months to transpose it. So we are aware that the department are definitely aware of it, and they have they're already looking at it and have started, well, maybe not started the process, but you can ask them. But yeah, 18 months is not actually it sounds like a long time, but it really isn't. So that will definitely be a challenge, I think, for all concerned. And also then, 18 months is already into 2024 when some entities are in scope. So there's an awful lot of, it's a very fast moving area and a lot of challenge.